Welcome, everyone, to another edition of the Industry in Transition Zoom call series, where we're very, very happy to have Michael Purpura, who's president of wealth management at DA Davidson, good friend of AdvisorHub. Welcome, Michael.
Thank you. Pleasure to be on, Tony.
Well, I'm interested to sort of hear, what's going on with the firm. There's been a lot of growth, a lot of things happening for you. So we want to get to all that stuff, but also want to see how y'all have fared during COVID times. And, we can talk about the haircut from COVID too, as part of the guys might like that, just for the morale boosting fun you were having over there at DA Davidson. But how you fared, and I want to talk a little bit about how the firm fared during COVID, and then some of the things I'm asking everybody, like what are we going to take going forward from this thing, from Zoom presentations and real estate stuff like that.
Right. Well, Tony, perhaps like everybody in the industry, Davidson has fared incredibly well during the last 18 months. Perhaps counterintuitive to maybe what we thought was going to happen if you think back 18 months ago. But the firm's fared incredibly well. We just ended our fiscal year on 9/30, and it'll be a record year for the firm in terms of revenues. Thank you. Great year in terms of recruiting. And our advisors, maybe most importantly, the numbers are sure fun and the firm's done great, but the advisors are just delivering even better service than they ever did. I think that's that's my big takeaway from the last 18 months, that we've talked about the nobility of our business, Tony, from time to time, and how people are trying to commoditize it. But the last 18 months, clients needed us. And at Davidson, our advisors stepped up to the plate. They were even more engaged with their clients than they ever have been. And the result is, wonderful numbers and terrific asset flows. But more importantly, we did our jobs.
Yeah, we earned our pay during this, that tough time, no question about it. And as I said about the haircut, what's fun about that is you kept morale up. It's hard to keep a culture going, in a tough time like that, when people aren't in the office and everyone's Zoom called, and it's hard.
It is. In particular, I think if you look at sort of our regional boutique brethren, we all rely on relationships, culture, being in person. So we as a firm had to look for different ways to stay engaged. So we're constantly not only on the phone, but creating different environments. And the reason my hair is a little shorter than the last time I did is I did lose a company trivia contest, and decided I would pay off the bet. And since then I've kept it. But we worked as a firm, all of our businesses worked very hard at staying in touch with our people remotely and creating fun, different events to keep people engaged. And I'm happy to say it worked, Tony.
That's great. And I think that was a tough thing for all CEOs to sort of deal with. How do you keep culture going in a tough time? Look, the easiest answer to that is start with a good culture, and then it's that much easier to get it going. So you had mentioned that some of the stuff is here to stay. I mean, clearly the advisors have figured out this Zoom thing, right? So that's been a great thing for advisors, and they've been able to sort of have maybe more intimate, conversations with their clients.
Yeah, there's no doubt that I don't know that the world's changed in dramatic ways, but our ability to engage by a Zoom has been very powerful. What our financial advisors have found is that they can, it's convenient for the client because they're not driving into the office. In addition, they've been able to connect with the next generation easy, Tony. We know that that's an issue for us, and we've been coaching and preaching engagement with the next generation as a firm and as an industry for a long period of time. But it's awful easy to set up a Zoom call and to say, well, why don't you invite your son or daughter? We know you wanted to engage them. So that's been a powerful tool. And there will be, going forward, there's no doubt, more Zoom engagement through multiple generations. And I view that as a good thing.
Yeah. So for our business, the other thing I've been asking everybody, and real estate, right? So we now have the Zoom. What's the impact of the Zoom on real estate? Most firms sign 10-year leases, so they have these long-term, the structural deals in place. But there's certainly opportunity maybe to tweak real estate. Have you thought about that at all? What that might look like going forward?
We have, and I think you hit it on the head. I think tweak's the right answer. I think when it first hit, there was this belief that there'd be massive turnover in real estate. I don't think that's going to be the case. I think as leases come up, there'll be the opportunity to be done some downsizing, but many of the advisors I've talked to still plan to return to the office. I think what we are seeing is the advisors, especially the more seasoned generation, they are more willing to work remotely than they were before, in particular at second homes, but they still want an office to come back to. So we're going to tweak it. We're going to tweak it lease by lease. We're not going to make any crazy grandiose decisions in terms of changes at this stage.
You know, and it's also important. You mentioned next generation. It's super important for next generation of advisors. You can't start off this business doing Zoom calls. I mean, you learn so much, right, from the man or the woman down the hall from you. It's you know, that's how you learn this business. It's an apprentice business,
right? For sure. And then we you know, fairly quickly through our training and apprentice program started to safely get people back together. We've prioritized that because I agree, Zoom can only provide so much benefit.
Yeah, and so I feel like we're set up well for 2022 in terms of, you know, how we do our business. It sounds like you guys have done well there. Well, you also recruited via Zoom, so you grew the business, which is something I know you like to press the flesh and be around. You're going to come out east next week, so that's another, you know, big deal. But you did a lot of growth without doing that.
Yeah, we did. And I'll be honest, I was maybe modestly surprised that Zoom recruiting and virtual home office visits were as effective as they were. But clearly it still gave us an opportunity to connect with people and to tell our story and to learn and make sure that they were an appropriate fit. And while I'd love to continue to always have home office visits, I do think going forward, Zoom home office visits are going to be a very credible option. And I think with everything we do, Tony, home office visits, work from home, hours, at Davidson, we're going to remain flexible. We're in a people business, and we've got to listen to what people want and try to adjust. And many of the recruits said, we'll come visit you in Seattle, we'll come visit you in Montana in the summer. But we're happy to do a virtual visit and think we can get to know you that way.
Yeah, I think and that's it. It's a mutual acceptance on both sides that this is okay. And if that's the case, why not keep doing it? Now, all that being said, that's all good stuff, but there's some real headwinds potentially for our business, you know, going forward. We're looking at a potential set tax situation with us. I mean, stepped up cost basis, capital gains. I mean, this is going to affect one out of every one of our clients, you know, going forward. What is the firm seeing? What are you guys thinking? How are you preparing your advisors to sort of deal with that?
Now, there's no doubt there's a lot that we can't control that maybe scares people a little bit, whether it's the regulatory environment, the tax situation, inflation, the political environment, whatever it is. You know, it's our advisors' jobs to make sure that they're talking with their clients through those things. And internally, whether it's our planning department, the people in our research department, we've got to continue to arm them with subject matter expertise. But again, you know, our philosophy, Tony, is pretty simple. I mean, largely domestic equity markets have rewarded people who had a long-term perspective, who were patient, who didn't try to time the market, who didn't try to worry about any one or two things and get too smart. And keeping people in the market, making sure that they've got a great plan, leveraging our planning tools and technology to lay that out and to show them that some market volatility may delay their plans, but they can still meet their goals. You know, all those general concepts, Tony, we have to continue to adhere to, regardless of the noise and regardless of the market environment. But yes, there are headwinds. I mean, people are worried about taxes. They're worried about regulations, and you know, thankfully, we've had an incredibly accommodative Fed that really has been the fuel behind this rally.
As we said before, this is where you earn your pay. if an advisor is unable to sort of, you don't have to know the answer. It's not a crystal ball situation, but you have to be well versed at least.
Right.
Yeah, no question about that. But there are other threats, that are, that are totally new. They're totally, 21st century type things where gamification, and the SEC is all worried about that. And then we have this whole digital currency, and robo is another thing I think that's now there. Robo thing advising was a threat before, and now you see a lot of large firms, I mean, like it or not, they're sort of going towards desks answering questions, interchangeable advisor, moving away from advice. I kind of look at all that stuff as maybe moving away from advice, except the crypto, which I'd like to get your point of view on.
Yeah, well, I that's where I would have gone, is with the advice notion. I mean, to me, the biggest risk in sort of the Robin Hood meme stock mania isn't, in my opinion, to our clients. Maybe it's to the firm, because when the regulators look at that, they immediately want to regulate to the lowest common denominator. They have proved that, and and sometimes they've done one or two good things, but mostly the regulations, feel burdensome and not as protective as frankly they should be. And I do worry that the gamification meme craziness will lead the regulators to scrutinize our business even more, and that's uncomfortable. So I think we as an industry have to continue to work with SIFMA and lobby and talk about the nobility of our business, because I do think that's a threat. With regard to crypto, I think it clearly it's becoming more mainstream. We're trying to understand it even better. We've hired a couple of analysts in our institutional world, and we're leveraging them to try to make sure we understand the legitimacy of it, trying to allow our clients to access it in a limited way for those clients who are appropriate. But only a fool would completely ignore it, Tony. You've got to pay attention to it, understand it. And my hope is that we see some rational ways for people to access the product. Because I do believe that eventually the SEC is going to have to approve multiple ETFs. And then as we think about cryptocurrency, if a client wants it, if the firm believes in it, I think that's going to be the sanest way to try to address some access to it.
Yeah, I mean, we're going to be talking about crypto at our event in November too. Just it's now part of the landscape, and advisors shouldn't be embarrassed to have basic questions about that. So we should all start at the beginning and try to get our arms around what is it we're talking about, so you can help make the right decision for your clients.
I think as an industry, aside from the currency, and you know this, Tony, because you've talked about it, but the intrigue is, does blockchain land up creating some efficiencies, right? Does it create disruption in terms of processing and operations and trading that could land up benefiting firms and benefiting clients? And I know we're a ways away from that, but we are studying that quietly behind the scenes to make sure that if those opportunities do arise, that we're a part of them.
And, blockchain seems like the winner, right? That seems like the thing that comes out of the crypto for sure that we can rely on. And the problem with it, of course, is it doesn't happen in a vacuum. So you've got to figure a way that terrorists and I get tracked everywhere I go. I got my credit card. I got this. I mean, you wonder how anybody can be Bonnie and Clyde today if you're using just because they follow you everywhere. But that you don't want this to be a place to hide, and that's the scary thing with putting your clients in there.
Absolutely.
Yeah. I want to get back quickly before we have to, because believe it or not, time's moving along here. Get back to the growth. So you're coming out here next week. So it's a great brand. I've always loved DA Davidson, love the brand, love what you guys are doing out there. But you're not just doing it out there anymore. You're expanding, and you're going to be on the East Coast in a fantastic market. I'm not saying that because I live here, but it's just, it might be the top. I think it is like the top broker market in the United States. Is sort of DC, Delmarva, Virginia area.
Yeah, we've been intentionally focused on growing the wealth management business for a long time, but just in the last 24 to 36 months, took a different approach and said, we're not going to be so regional anymore. It's going to be completely people driven. And because of that, we've seen growth in Nevada, growth in Colorado, but perhaps most exciting has been the growth in sort of the mid-Atlantic market in Virginia. And again, while I appreciate your comments regarding the demographics, for us, it was people. We found a cadre of people who thought like us, who liked our story, who largely, as this won't surprise you, had worked at boutique firms and regional firms before. And the more we get out there and tell our story about how we have all the products, all the services, all the subject matter expertise that bigger firms have the capital markets businesses that big firms have, but we simply do it in a better package, in a better culture and environment.
I think the regionals, gone over this, some great firms like Janney. Of course, I come from a Legg Mason background, and you'll find that as you come through the Mid-Atlantic here, a lot of great firms that are gone now, and a lot of the advisors that started at Wheat First or Legg Mason or some of these firms that are no longer with us, they're very nostalgic for having a culture and being with a place where they feel like they matter as a part of something, and that idea is what fueled the independent movement, right? And makes everybody go. But I think regionals are in a great position because you do have the financial stability. Especially from like people don't know, D.A. Davidson, you've got a huge money market, money management arm. It's a powerhouse, firm. And to have that kind of financial security, versus what guys are going to be looking at in the independent side, which I love the independent world. I started a couple of them, but you don't have the same finances that you do. And great payouts. So I think the regionals have a real opportunity to kind of shoot both ways, right? You can talk to people looking at independence and people, looking at the wires.
Right. I was talking to a recruit, Tony, in your neighborhood a week ago, and he made a great comment that resonated with me. He said, most advisors have an entrepreneurial spirit, but maybe they're not quite full-time entrepreneurs. And that's how I relate sort of our business to the independent business, right? I think our people have a great entrepreneurial spirit, but whether they actually want to do all the responsibility associated with running their own business, that becomes a question mark. And I think some of our frenemies have seen great growth. We've seen great growth because we're identifying people that have that entrepreneurial spirit, but maybe don't quite want all the responsibility associated with taking that next step.
There's no question. If you don't have to know, independence is good for some people, but for most advisors, it's a pain in the ass to have to do your rent and the insurance and all that. And they think they want to do it, but when they start getting into it, it starts to be difficult. And I think that is the real opportunity. I expect, because of what we're doing here, the Zoom and all, like you said, now you're doing people versus region. You don't need to be so close together anymore. And I think regionals have a chance. I mean, look what Stifel's doing, some of the other firms, that grew growing and all over the country. So, I'm a fan of what you guys are doing. So I appreciate it. And believe it or not, that's 20 minutes or so. Well, people have stopped paying attention to us now.
Yeah, well, if they paid attention this long, I'm grateful. Well, thank you, Tony. Again, we're happy to tell the Davidson story. We think it's a great story. I want to congratulate you again on the success that AdvisorHub has had. It's been become mainstream, and you and the staff should be very proud of that. And Davidson's happy to be associated with you.
Hey, we're great partnership. So glad you're here. Thanks a lot.
Thanks, Tony.
Talk to you again, Mike. All right.
Okay.